Hey traders, this is Christian from Tribeca Trade Group, and this is your end of day market recap for Wednesday, April 13th. One more day of the week to go. Tomorrow, as a reminder, is monthly option expiration. So you might catch a little bit more volatility tomorrow, which is odd because it's a Thursday. Markets are closed on Friday. So we'll see what we get. Risk disclaimer in front of you. Everything that we are talking about is information purposes only, not giving out any advice or recommendations. Again, everything that we're going through is for education purposes only. So quick theme of the day, risk on day. Well, we haven't had one of those in a while. Really good participation. Again, one of the things that stands out to me, was kind of just a little bit, tired of this market in terms of the price action. In yesterday's video, kind of talked about that for a while yesterday. Even talked a little bit about that this morning too, about how we are seeing some sell signals in the market, and just like that, we do get a bounce back day. The one thing that I would say about today's price action and how great it is, which we will go over all the charts and kind of try to make some conclusions, is that one day is not a trend, right? Just like anytime the market goes down as well, one day is not a trend. You kind of just have to put this in the overall wheelhouse of how whippy this price action has been, and we'll talk about some standout areas of the market too. On a day like this, you had very good participation, right? We talk about this all the time, right? Where either the wind is the wind is in your sails, or the wind is against you, right? Today was one of those days where the wind was at your back, right? So really good participation. The Dow Jones, which has 30 stocks in it, had 28 up, 2 down. The S&P had 400 up, 100 down. And look at the Nasdaq, 2263 versus 563 declining. So very strong breath, something that we haven't seen in a while. And is this a turning point for some areas of the market that have just been kind of dropping like a stone? It could be, but you really can't make that confirmation yet. So let's talk about the indices first, and then I want to go on to some single names, and we'll talk about where the sector strength is. That might help a little bit. But I want to get to some single names because I've been spending a lot of time on big macro concepts such as bonds. Bonds did rally a little bit. They gave back some of their gains at the end of the day, but I do think that was part of the. So let's go there first. Let's get the bonds out of the way. But here's your little bit of a bounce. Right. And I think that's been kind of helping a little bit, even though it's not a big bounce in bonds. I would honestly like to see a move back. I would love to see a move back to the bottom of value, or at least above the 5-period moving average. But you can kind of see that even with them green on the day, it helped a little bit. Actually, it probably helped a lot. Every time we've seen, either the 30-year bond /ZB or TLT, every time we've seen this down 0.5% to 1%, we've seen growth stocks just get smacked, right? So here you could see, this was not a big move. And maybe that version point of control does get taken out. Remember, TLT and the other one that I just showed you are different duration. This is 30-year. TLT has a duration. Let's see, what is the duration for TLT? I think it's something like 18, maybe. I could be wrong with that. It is 18. Haha, I got it. Right. So that is the duration of the bonds, right, that you have in TLT. So much different than the 30-year, right? Still long and further out maturity. But in any event, let's go over to the S&P technicals. Well, this was something that I had mentioned both in the trading room as well as in my end of day videos, and probably on Twitter as well, right? I did not like how price sank into the value area for the month of April, right? We had talked about before, like in the beginning of the month, we talked about it in a couple of weekend videos, that at the beginning of the month, that at some point we might see a check back to the top of value, which was a pretty good distance. We have seen that. We actually went a little bit too far and went inside value. So that's okay. That's not a problem if price can kind of stay above here. So the real level that I'm paying attention to is 44.24. You will find me change my stance on this market, depending on if we are above value or below value. If we happen to travel back inside value, then it may trigger the 80% rule. And this is a big value area to go all the way one side. If you're not familiar with the 80% rule, somebody asked me this on Twitter. Number one, Google it. It's just 80% rule and value areas, right? It means that if you start a period outside of the value area, right? And again, when I talk about value areas, what they are is price, time, volume of the previous period. So this April value area is based on all of the March volume profile. Okay, so if you start outside of the value area in a period and you drift into it, right? Notice how on the top of our screen it does not say 80% rule anymore. There is, and as long as you establish yourself firmly into that, there is an 80% chance that you go from one side to the other. All right. For example, today, if we look at the 5 minute, right, and that, you know, this works on multiple time frames. I guess we didn't go through. I thought we did go. Let me just make sure the thinker swimmer is adjusting. I think for Nasdaq we went 80% for the day. This almost did, but I guess it didn't get there. Maybe it did for SPY. Nope. Regardless, there is a level to watch that I think is more important for tomorrow. Notice where we got back to, basically where we were yesterday, right? You know, we rallied in the morning yesterday, and then we had that big fade. So 4449 also to the upside. Now we only have one more day of this week, so this value area is just for this week, right? But you could see that, you know, we are kind of, if you could see the trajectory here, and it really, you know, that's why I go over multiple time frame analysis, is because you could see just different trends, a little bit of a different picture here. And so we're kind of rallying on the, you know, bottom of value, and so we really haven't turned the corner, right? You could kind of draw like this, because you could draw a channel here and say that we're close to the top of the channel. So we need to keep moving, right? But obviously one day, if you made money today, right, and the market moves back, right, you know, and you locked in profits by selling, you don't have to give that money back, right? It's a major concept. We'll come back to that one. Let me go over Nasdaq, right? So this one, I'll start with the 5 minute. This did have the 80% rule did work. You know, we traveled through the whole value area for the day. Again, this value area on the 5 minute chart is based on yesterday's price action, right? It's just one day, right? So it was based on yesterday's volume profile. All right. For Nasdaq, or might as well look at the Qs, because I know more people look at the Qs than Nasdaq futures. You do have a possible, I mean, it kind of looks like a bullish engulfing candle for the day, but there's needs to be more work here, right? We need to get over the 5-period moving average, the 20, the 50, right, and back outside of value, and ultimately back above the 200-day moving as well. Same thing with the S&P. So, you know, this is more of what I refer to as a struggler for now, and it is possible, right? I know that we talked about this yesterday, but we don't know if we have a head and shoulders, inverted head and shoulders. You know, we could carve out an inverted head and shoulders here, left shoulder, head, right shoulder, right? It's just too early to tell that, right? And at the very least, I need price to get over 351.60, right, for that to be confirmed, right? Because we may still have some abstract regular head and shoulders, left shoulder, head, right, double right shoulder, right? So we'll see how that plays out. And I think for now, you know, the Nasdaq and the Qs, to me, with this type of a chart, they set up more for very select plays, right? That's how I've been handling, you know, tech and the growth stocks, being very select, and also day trading them more than doing any swing trading, right? I think that's a really good strategy until this group straightens itself out and reveals itself, right? Be mindful that when you're going through charts and so forth, I know everybody likes to get a conclusion out of, you know, the picture that they see, the analysis that they see, but sometimes you just need more time, right, before things really kind of straighten out. You know, again, what was kind of key was getting for the Qs getting rejected at the 200-day moving average, also on the weekly chart, you know, getting rejected at the top of value. So this has got some work to do. This is a project and a more difficult puzzle. Now, just because it's a more difficult puzzle, right? I know people who are really good at puzzles. They don't go for the 100-piece puzzle when they're at the store. They go for the 1,000 or the 10,000-piece puzzle because it's more difficult. It's different in trading, right? If it's more difficult, don't gravitate towards the more difficult. Gravitate towards the easy, right? Go towards the one that's a 10-piece puzzle. All right. So well, I'll just give you one look at the IWM and then we'll go on to some of those names. So I wanted to go through a couple of sectors. So the main thing here is that IWM held, right? That's 197.85. We did bounce on the bottom of value. However, the chart is a mess. So let's get to some of the you know, where the easier trades have been. One of the best charts that I see right now is in terms of sectors, and I'm going to go through like 5 or 6 sectors, right? Is the metals and mining, right? Every time. So first of all, what's been going on with the metals and mining? XME. This is an equally weighted ETF, by the way. Every name gets the same representation in the ETF. Same thing as XRT or an XHB or an XBI. They're all equally weighted, right? But here's your sideways action. Here's your breakout. And since we've had that breakout, every time, you know, just like tech stocks used to be a couple of years ago, you have your move higher, consolidation, move higher, consolidation, move higher. This consolidation lasted a little bit longer, but is resolving itself higher. And then what we tend to do is drill into the ETF and look for where there's opportunities, right? So a couple names that I think are interesting are Cliffs. STLD is another steel name. I think that looks pretty good. But just going back to Cliffs, because this is one of my favorite names in this group. What I would watch for tomorrow or even next week is a break above 32.46. Of course, without the signal, you could start a position here because the daily chart looks pretty good. It looks like it's trying to resolve itself higher. But it just, you know, it may need a little bit of time, so you have to be patient with it. Cliffs, and then of course when we get to the more of the, instead of the steel names, but Alcoa, this was a name I talked about, and I was a little bit frustrated yesterday because I tried a position right around somewhere around the highs of the day, and the thing just faded in the middle of the day, went lower. Well, I re-added that position today, and if you look at my first trade, and I didn't go back into it as large as I did yesterday because I just recognized that, you know, it's whippy, but this worked. I got in at 85.30 in the beginning of the day and gave it a chance to get going, and it closed pretty decently. What else in this space? I get these two names confused. I think CENX, Century, not CEIX, Consol Energy. We're going to go through the energy stocks next. But you know, this was some of these names are really moving. Some of them are a little bit stagnant in energy. Let's look at the ETF, right? So here's XLE. You know, reminder that Chevron and Exxon are a big component of this. OIH looks pretty good too. That closed above value, right? And then of course the XOP is the other one. But if you go across some names in here, you're going to find the ones that are moving a little bit better. I like Devon Energy, right? That's been moving higher. Oxy saw some big calls today. A lot of them were rolling, I think, from April as well as May, going out. I think it was the June calls that saw the big volume today, right? And then there's a couple other names within the group. What else do I have written down here on my sheet? Oh, ATI is another name. That's finally, I gave up on this name. It's just, for me, it was just taking too long. And I would rather just, you know, wait for the signal, but it does look like finally this thing is looking to resolve higher. Again, look at the past, how this has worked. It's taken its time a couple times since this name has broken higher, right? Went down for about 2 weeks, went up on earnings. And then since it did that on earnings, it's been very strong. Look at the consolidation the last time. This was around 25. The stock's not that much higher from here. So yes, this is a name that you have to have a little bit more patience with. And then the other group, which has just been unreal, is the coal stocks, right? So if you look at names like, this was a name that I was in last week. We did profile this one pre-market in our charts channel. This one did rally, right? So I played this one through the value area last week. And now it's, kind of hesitated a little bit, back checked in here, and look at it go. And this is behaving better than I think the BTU. Well, actually, BTU is no slouch, so very, very strong there as well. CNX is another name that's breaking, a little bit of consolidation, breaking higher. All right, so we talked about that group, right? So I mentioned I would go through a couple of these sector ETFs, and I think XME, metals and mining, the energy, there is where the strength right now is in this market. Also, if you want to look at another group, right, which may not be on your radar, because there's a couple different of these sector ETFs. Look at the difference between XLB, which, by the way, does not look bad, right? XLB as in boy is for materials, right? But look at the IYM, right? So it's a different fund manager. This is basic materials rather than the whole materials group. So just acting better. I like the breakout here, consolidation, and move back. And, there's things like this that are acting well. OLN, right? And I know Deere, which was a name that I posted over the weekend, and people got mad at me. They're like, farming is really expensive. The farmers are getting squeezed with the fertilizer prices. So really good feedback. And I get that, right? And talking about how hard it is to order from Deere because of the supply chain issues. However, it's, this is a nice weekly looking chart, right? Here's the breakout in Deere, and it's been, it hasn't been straight up. It's given a couple twists and turns, but this Deere looks pretty darn good, and from a technical standpoint. All right, a few other names. We'll get a little bit in a little. So where I like to be in tech right now is the cyberspace, right? That's been acting very well. Here's the weekly chart of the cyber ETF. We'll see how this finishes for the week. But even though it sold off last week, at least it held the value area for the year. And here's what it looks like here. If it can break through last week's high, maybe then you might see this 55 VPOC being taken out. If you go through these names, right, the one that I've been long and I've been kind of adding to, I view it as best in breed. Had a nice day today. I did sell into the strength, right? That's what I've really been trying to be better at as a trader. Everybody needs to improve on certain things. I like to let my winners run. I do. That's where you get big profits. But this just hasn't been the year to let your winners really run. It's been more of you got profits, take some profits and take a good portion of the profits, put them in your pocket, reset for the next day, and trade what's in front of you, and not try to really sit with too many trades for too long. Right? That's just how the market has been. So I took some, I added to this Palo Alto trade yesterday, and I took some off a couple times here. I got 632. All right. And then, of course, one of the names I've been watching and haven't really been trading too much is CrowdStrike. That actually finally, it hesitated a bunch of times on the 200-day moving average, right? You got a flat 200-day moving average, which I'm not in love with, but I like how it did retake it. And even when it was weak last week, it held support, right? Another name too that's been acting really well. Again, I haven't gotten involved in these two names, but I've been watching. The Tenable has been acting very, very well, and you do have an odd thing in tech right now. You got a breakout in this one, so they've been few and far between. But the cyber group has been showing the strength. There's been some takeouts that have helped, right? And lastly, just a couple other names that I find interesting. Costco, which I view as best in breed, right? Had a nice candle today, right? Got a little bit of extended on the their monthly sales number, right? Really had a big move, but look at the volume on this, right? On the break higher. and look at the red bars. That's actually, what you want to see is a little bit of low volume. I had a question about that. I get this question every now and then about, hey, I don't, in the indices, I don't really like it because there's not big volume, right? Try to find where there's actually been big volume in the indices on a rally. I bet you can't do it, right? I get to, and it's a perfectly, really good concept to go over. It's different than in the single stocks. In the indices, look at the red bars versus the green bars. You don't want big volume, right? Every time that there's big volume, it's on distribution days, right? Tell me where you can find big volume on a sustained rally in the Qs or in the S&P. I bet you can't find it, right? That's because the big volume comes in selling. And it's kind of logical when you think about it. Most hedge funds, how do they trade? Well, they accumulate a little bit at a time, right? They're very specific usually. Hey, I'll buy 50,000 shares, around here, right? Today, I'll buy another 50,000 shares over the day, right? Another day, hey, we like this name. We're going to put on another 50,000 shares, right? And then when they go to sell it, I want to get out of the whole piece right here. That's how hedge funds sell. They don't, so, low volume, believe it or not, some of your biggest rallies that you see, they're always low volume. So I know because it's different because people want to see big volume when they're on a breakout in a stock. All right. So just keep that in mind. I see that all the time on days when there's a big up day. Oh, I don't like it. It was on low volume. Yes, you do. That's what you actually want to see is a low volume rally. Again, look over any time period and tell me where you've seen a sustained rally on high volume. You can't do it. All right, guys. So maybe we'll end the video here. That's enough. Again, bottom line or kind of conclusion, as I like to provide, is this was a nice day. I was holding positions into it, trying to be selective, and basically what I did, on days like this, you have to be in 2022. You have to be super disciplined, right, and be selling into the strength. I did a lot more selling today. Tech resources. How could I forget you? Tech resources. This was another one. I've been waiting for this thing and being as patient as possible. So I sold a chunk into this strength today. This market will give you chances to come back. So that's how it's been. That could change. We could go on another nice run. That would be wonderful. But I could tell you where I've had success so far this year is staying very nimble, not getting over the tips of my skis in terms of positioning. Every time I put on more positions, it ends up being more problems. All right. So guys, have a great night. I'll see you tomorrow. By the way, if you're not a member of Tribeca Trade Group, right? I don't talk about this all the time. Go to my profile, right? And you can click on here for services, right? And you could be a part of our wonderful community. We've, as hard as this year has been, I can't give enough credit to the Tribeca Trade Group members. We have people shorting, we have people, obviously going long, back and forth. We've all been able to kind of, be comfortable and really kind of help one another through this difficult time, through this, more difficult year. Some people say it's more I think someone said in my video yesterday, well, this is actually how markets act historically. Yes and no. I don't think that you could really say that completely. I think that, with the Fed beginning to tighten, that's different than what we've seen in the majority of years. There's been certainly over the last 15 years, there's been timeframes of when the Fed is tightening. This is one of those timeframes, but they usually don't last as long as the other way around. So in any event, that's it for today's video. Have a great night. See you tomorrow.